Ken, we're on deck for Netflix earnings, and a lot of us subscribe to Netflix. What in particular are you looking for when they report?
There's a lot of questions, of course, in terms of the impact from tariffs and trade wars and where Netflix's position, since they're a global leader in terms of their position in entertainment for video streaming. Those questions really lead to this competitive advantages Netflix has to its competition, but then also the nature of their business is not physical products that could be, in the lines of tariffs. So whether there will be any puts and takes from certain jurisdictions in Europe or in Asia remains to be seen. But Netflix is loved by all subscribers in many countries, and that's really to the advantage Netflix has.
What are we hearing as far as the potential for threats of tariffs on services like those which Netflix provides?
Very little. Actually, even better than the Apple story this weekend, where the Trump administration capitulated on an exemption. When we look at Netflix, if you're the European Union or even specific countries there or in Asia, do you really want to have price increases for subscribers, which runs in the millions and millions?
So when we talk about Netflix, I'm a subscriber. We watch. Which is more popular and which is working best for them, the traditional model or the ad-supported subscription model?
The core business of Netflix, and it's a business that was established over 20 years ago, is the ability to drive subscribers. Just in the fourth quarter, they added just under 19 million net subscribers. They have 302 million subscribers. We're looking ahead for 15% revenue growth from that contribution of subscribers. Last year, they began to look at advertising revenue and also introduced a more affordable ad pay plan versus ad free. It's working well. We're going to begin to get some financial numbers in those two categories this year, but it's still small relative to their traditional business, which is ad-free subscriber base.
So what I heard you say, though, is that one, subscribers are willing to have a hybrid, I'll pay, but I'll suffer through some advertising. And two, that's still a relatively small portion of I think the anticipated revenue is something like 10.4 billion. It's nowhere near a driver of their revenue, is it?
It really works well for Netflix because we have in the US the ad-free premium ultra high def plan is now $25. The ad pay plans are under $10. And so it gets to the issue of affordability. I think if there's cord cutting, plus also reducing the number of streaming providers, nobody's cutting Netflix. And then when we look to the rest of the world, because the monthly rate plan or the average revenue per user is different and much lower, particularly in developing markets in Asia like India and Latin America. So I think it's a win-win for Netflix. They're really exceptionally positioned.
What about the cost of competing for live sporting events or live concerts and just the enormous cost of producing content when you're only going to get 8 to 10 episodes in a series? Are they still on top of that?
Yeah, so we saw last year the NFL games that they were able to produce, I believe Christmas time. It's been a while. But also they signed a multi-year, multi-billion-dollar contract with the WWE, Worldwide Enterprise Wrestling Enterprises, that looks to be an opportunity for Netflix to extend that brand outside the US. Keep in mind this, that since I've been covering Netflix for many years, they've been very cost disciplined on producing programming and entertainment content, about $17 billion. So I like to think about things like the NFL as a toe in the water. They're not going to get into the crazy situation of bidding for the large size NFL sports rights or NBA. So they're going to be smart about it. Now, where they've been successful and have really outpaced anyone is sports documentaries, the ability to play off of some of the leagues I've just mentioned and profile different stories. They've done it across those sports, plus tennis and golf and Formula One.
So let's wrap this up with what do you think investors who are going to be into Netflix for the long haul? Is that the right play? And what is it that attracts them to maybe stick it out with the volatility that you first mentioned, the potential, maybe the potential for tariffs on streaming services?
The world has been kind of turned upside down, but it really happened for Netflix and general entertainment going back 3 years ago, as we saw this enormous shift from legacy paid channel TV to streaming. Netflix also is in a great position where they're able to gain wallet share in terms of subscribers moving to their platform anywhere in the world. It's the best technology platform. And they are the only one of the few entertainment companies that can compete with the much larger social media companies that have Apple TV. You know, there are many of them. YouTube has done exceptional. TikTok's another one, whether it's here or not in the US. Netflix is focused on organic growth. And I think for investors, this stock will continue to be a winner out over the next few years. We have a target today of 1,125, and the stock is trading under 1,000.
Anything you want to add?
I think with Netflix, there's nothing more impressive than staying focused on what you do well and driving organic growth. That's very hard to find in this industry, which is movies and entertainment.